So we're about to rocket up. In fact, it already looks like markets are going back up.
Well, that's the thing. That's the thing with these markets. This is why we can't actually have another .com and we can't have another global financial crisis, because this option market, this insurance market, is larger than everything.
That didn't exist back
It
with
didn't
.com?
exist. Well, it did, but not. It didn't. It wasn't like it didn't take over the market this way.
Oh, so it's like training wheels or FSD or something. Like the market will always course correct?
Well,
And
it's
go up?
more that I call it buoyancy. The market now, the bottom is it's getting thicker and denser that you can't dive all the way down and stay there. It's like getting through oil, getting through whatever, and it's get thicker and thicker and thicker because once you get down to a certain level, once all the people who are forced to sell because of whatever the event happens, once that's done,
Right.
then the people who have their puts monetized, they monetize those puts. They take the money, they buy the market.
Of course.
The market makers stop selling because the only reason they were selling was to bounce off their books. So they don't have to sell anymore. So then it pauses, and then what happens? People are like, "Okay, I'm going to make bets on the other side for it to go up." So as it goes up, you have it the other way, and now it goes up, and you can go only down 100%, and you can go infinitely up. And so when it goes up, it rockets so much higher up. Because the calls, so the puts are what you purchase when it goes down. Calls are when you're betting that the market's going to go up. They just keep printing money. It goes up, people buy more. It goes up, people buy more. It goes up, people buy more. And it just keeps going and going and going and going. So the market just keeps going up and up and up and up and up
Until it gets overinflated.
Until there are no more buyers.
So
until everyone's invested in rollover.
What's going to happen?
So one, there's no bubble to pop. One, we don't have the media speculation of buying. We don't have large swaths of the markets that are all supported by the asset by bubble AI. Second, the thing AI is doing is actually productive.
It's crazy productive. It's the most productive.
It's the most productive thing we've ever seen. I mean, short of when the robots come, is like actually productive. So it's not like .com. And it's not like the global financial crisis where there's homes you didn't have to have a loan, and you don't have to have a job, you can get a loan. Okay, that's a problem. And a .com, a .com name on a piece of paper could be worth millions. This is not it. If anything, it's undervalued.
Right. That's what I think.
And so it's we don't have the bubble there. So then the question is, I was telling you about these different things. There's these periods in the year where those insurance policies that people purchase all essentially expire around the same time. So there's insurance policies for the day, insurance policies for the week, insurance policy for the month, insurance policy for the quarter, and insurance policy for the year.
And those are public.
Yeah, absolutely. But so every week, some of them are expiring, every month, some of them are expiring, or whatever. But sometimes they all coincide together where the day, week, month, quarter is happening at the same time, and then year for December.
When is the solstice happening?
So these happen to four periods during the year. It happens in generally in March, June, September, and December. And it doesn't usually cause a. So are those periods the insurance policies are sort of like limited, and so if there's going to be a crash, then let's say an event happens and the stock market goes down, well, about a bunch of people have to hurry up and buy insurance now. And because they have to hurry up and buy insurance now, they're paying a premium for this. They have to fork over a lot more money. Ironically, these insurance policies cost the least when the market's high and rising. So the very moment you need to purchase an insurance policy when the market's falling is when they're the most expensive.
Of course.
And when they're the least expensive,
that's
and
normal.
You can buy them for 1/100th of the price, 1/1000th of the price.
It's like health insurance. If you go in and you're healthy and young, your insurance is going to be cheap. If you go in when you're elderly or diseased, then you got to pay more.
Exactly.
So you think you should always have insurance?
No, I'm saying that there's these large players that have no choice but to buy the insurance.
I see. So where are we right now?
So the window of weakness for March opens up from mid-January all the way to March. So between mid-January and basically almost the end of March is a period in which, if there's a major event, it can likely cause the market to correct sharply to the downside.
But it only went down
COVID-19
17%.
Well, we might be at the start of that. That's what I want to.
Oh, you think it's going to go down more?
It could very well.
So this little bump today is not.
No,
It's fake out.
it could very well be a fake out.
What does your signal say?
Well, so my signal tells me where the price can get to. Not that it's going to happen now. Well, not exactly. It actually does say that for Bitcoin. We'll take a look at Bitcoin because Bitcoin just follows it like almost to a T. But for the regular markets, it tells you. Well, maybe it would. My signal would tell me, but I don't pay attention to the Nasdaq. I don't pay attention to SPYs. I'm a Bitcoin trader.
Mm-hmm.
But it tells you where it can get to. But if it continues in this way, then it suggests that we're going to head much lower. So let me just pull up my chart.
Much lower. Give me a number, Tom.
Yeah, let's find out.
You're freaking me out with this much lower thing.
Let's go with the SPY first. Actually, let's go for futures. And let's add on. Okay, so all right, so this is technical analysis we're going to be doing, but technical analysis means nothing if you don't have the if you don't understand the mechanics of how people need to respond to the market. So, for example, this level you're seeing over here, let's call it this level, this fuchsia line, is essentially like the emergency line of the market. If we're going to fall far at all, it'll be falling to these levels, right? It'll fall to the future line, fall to the future line, to the future line, to the future line, so on and so forth, right? So we haven't had a drop here yet. So if we're going to have a major thing, this would be the most I would expect, like for it to actually get to, and that would be a 25% drop, which is totally normal for the market.
Wow.
Let's just reduce you.
Are you buying options right now?
No, I don't really buy options. I'll show you why I'm playing the crypto thing instead. So,
I mean, if it falls that far, oh my god.
well, the thing is, I don't care so much about buying options on the way down to it because one, options only last for a while. Like I said, they expire at whatever interval. So you have to, over here it could have fallen over here it could have fallen over here. So you don't know when that's going to happen. You just know that it will. But if it does, you buy the hell out of this.
Mm-hmm.
You just buy the hell out of it. If you did that over here, whatever, I mean, that was gangbuster money. And that's when you buy calls. When it comes down over here and people go, that's it, the world's over. You got to remember, no. There's $100 trillion worth of people who the last thing they want is for the market to go down. Can you imagine? President of the United States comes down and says, look, I know the market's down for 5 years. So we're going to take our lumps, man. We got to take our lumps. It just went too far, and we're going to have to let that go. No,
so they'll print money?
Donald Trump is already threatening Jerome Powell and they're like, we're going to need more rate cuts. Inflation signals are going up. Stock market is at all-time highs.
Government doesn't care about that.
And Donald Trump is like, we got to cut rates.
Yeah.
We got to help the people.
Of course. Definitely.
Yeah. Well, I'm not petitioning for anything. The question is, how do you profit from
I'm not saying it's a good thing. I'm not saying it's a good thing, but yeah.
Well, it's a thing. All right?
You say District 1?
Yeah, District 1. It's always District 1. So what I'm taking a look at here is, let's go back to the daily chart. When the DeepSeek thing happened, which was, it was a couple of days ago over here. So this is the drop that we had from DeepSeek, 3%. And you'll notice that, I'll show you this here. Can you see it? Is it 2? Let me see 1 second here. All right, this yellow line is I believe that's the 3-month volume-weighted moving average. So just think of that as like the mean of the price weighted by volume over this period of time. And often we head down. So when the price actually fell, we actually fell to one of the volume-weighted moving averages. So it's no surprise that we actually bounced up pretty significantly. The issue here is that we have to, if we don't regain this high, if we don't close above here before, let's call it March, then big trouble. Then we're likely, because we're in the wind of weakness, we're likely to head downwards here. I wouldn't expect us to go much lower than what's this price over here on the SPY? 55.55.
Oh my god! But wait, where's the fuchsia line?
Which is about 9%. Well, the future line, if this was an actual bubble, then I would be like, okay, fine. But I don't see that. I don't see that happening. I don't see an event occurring because of DeepSeek that causes the amount of investment inside of DeepSeek is not enough for this. So, for example, just to give you an idea, right now the stock market's only down this much. But if we take a look at Nvidia, which is one of the most, this is the AI name. It fell about 20%, right? So this fell 20%. It's like a huge weight inside of the stock market, and the stock market hasn't even gone down that much.
Mm-hmm.
So this could fall, potentially another, 30, 40%, and still the stock market might drop, 20% or something like that. So the question is, will it get exacerbated to the bottom? But since you only get the exacerbation towards the bottom if there's a panic and there's a level of uncertainty, something that we don't understand. If everyone thinks it's the AI bubble that's unwinding, well, they're not going to be selling a bunch of. They're not going to sell Tesla. They're not going to sell Cisco. They're not going to sell a bunch of these other ones. The panic is not going to be there.
But I mean, here's the thing: every day and any day, a new algorithm, a new breakthrough can come out. Like, we should be expecting these black swans to be showing up. Like deep.
Well, it only matters if they show up during the window of weakness. And then it only matters if you're holding something and you cannot afford that going down, then fine, sell it. But really, they're buying opportunities.
Right.
These are not. You don't need to panic for these things because, as we've seen, they're not going to let the market go down. So what I thought was interesting for Bitcoin is that about this weekly trade that I put on.
Yeah.
And not going to go through all the details here. You guys could always sign up to sacredprofit.com if you want to get more of this information. But essentially, the weekly trade started over here.